Hi, folks. Please read the disclaimer. Very, very interesting data to share with you today. We're going to talk about the Nifty Gold ratio and trying to identify what's coming next basis this ratio. Now, there are some very big assumptions that we are making uh, in this video. The biggest assumption that we are making is that this is not a once in a lifetime move that we are seeing, that this is another gold cycle um, that we have seen multiple of in the last 30-40 years, and this is not like once in a 100-year move. That is the only assumption that really has gone into this study. Do look at the weekend investing momentum model portfolios. There's a link in the description. You'll find some portfolio fitting your risk profile there. Nifty has been consolidating for the last year and a half, slightly more perhaps, 25, 26,000 range. But gold has been performing in rupee terms, and gold has gone from 90,000 to 1 lakh 50,000 in the same time period. So how much longer will the Nifty need to consolidate? That is one question we want to answer. How are equities looking versus gold at this moment? And is there any technical correlation we can identify between Nifty and gold INR basis long-term studies? So let's look at a ratio chart, Nifty divided by gold INR prices, and see if we have any pattern there. Currently, the Nifty to gold ratio has gone below 2, and we are sort of in the sixth such situation since the year 2000, where this ratio has come down to nearly 2 or even lower than 2, between 1.5 and 2, you can say. And that has been sort of the bottom of Nifty many times. So in 2003, Nifty bottomed and started to go up in a huge bull rally. We went from nearly 2 to 6 on this ratio. Then it collapsed in the GFC, and there was a remarkable run up in the next 6 months in 2009. You can see this leg here. And then again, as gold went up, 2011 found a new bottom on this ratio. And then from 2011 till 2015, we had a run, then some correction, then another run from 15 to 19, and before which COVID crisis came, and Nifty was bottoming again here at 2020 March, and from there we had a huge run up till 2021 October, after which gold has had a run up, so it has come down back to below 2. So this has been the history in the last 25 years, that every time we find ourselves below the 2 mark on this ratio, you can say it's a very high probability chance that Nifty starts to outperform gold after this. Let's look at some data. So let's look at 6 months, 12 months, 24 months, and 36 months after the ratio falls below 2, what has happened in the past. So these are the previous instances when this has happened, that the ratio came below 2, and then 12-month forward returns, 6-month forward returns were on average 17%, 12-month forward returns were on average 42%, 24 months forward were on average 27.3%, and these are all annualized returns. And 36-month average returns post this event was 23%. So phenomenal Nifty returns have happened post this kind of a event happening, where the ratio of Nifty to gold went below 2. That's the history of 6 instances. You can say number one assumption is that 6 instances are a good enough sample size to predict whether the seventh time it will happen or not. And number two assumption, of course, as I mentioned earlier, is that we are not uh, in a once in a lifetime kind of a gold move, where this will not really make any difference. So with those assumptions, let's move forward. Let's also look at how long will the equity rally last after such instances, uh, until gold starts to outperform once again. So in the past, the ratio is mean reverting. So stocks performing, stocks not performing, stocks performing, stocks not performing, performing, not performing, performing, not performing. About 3 to 4 years is where equity takes over the control from gold, and then the next 3 to 4 years is where gold takes over the control uh, from equities. Now, this ratio coming down or going up also does not mean that when the ratio is going up, Nifty is outperforming gold. It does not mean that gold is coming down. It means Nifty is moving up faster than gold. When the ratio is coming down, it does not mean that Nifty has to necessarily fall. It means gold is doing better than Nifty. So you have to see it from a ratio perspective. So right now, in the last year and a half, what you've noticed is that gold is performing much better than Nifty, even though Nifty is stagnant near 25,000 mark. So what may happen from here in the next move up, you will find that Nifty perhaps can start to move faster than gold. Both may move up. Maybe gold will move up a bit and Nifty will move up faster. That is what is likely to happen. Now, gold has outperformed equities over the past 3 years, suggesting that we may be approaching the beginning of a new cycle. And when we see what has been the gold performance beyond this bottoming event in each of these circumstances, we find that on average, about gold's rally is 3 year CAGR of 9% that happens post that. So, gold can go into a lower rate of ascent while the Nifty goes into a steeper ascent. That is the possible. Now, again, we can't really ignore the current global scenario, where, in my own opinion, and that's not data backed by any means, is that gold will not peak before Trump goes out of office. That's a thesis that is in my mind. It could be completely wrong, but I think gold will continue to go on till Trump stays in office. And at some point during this 4 year tenure, gold will essentially forecast ahead, and perhaps 2.5 3 years into this tenure, gold may peak out, at least for some time. So Trump being in office is good for gold, and that scenario, if we now superimpose on our study, then Nifty will really have to do super wonders to beat gold going forward from here. So that is one sort of situation where we may not get the seventh study as we are thinking we may get. So what are the some key insights that we have learned from this study? That Nifty to gold ratio has reached a historic low. That is one for sure. In comparable past situations, Nifty has provided returns that exceed the average with subsequent 2 to 3 year period. So we are in a very, very good position to have some fantastic gains from Nifty. Historically, gold has also achieved a 9% CAGR following this low point. So it's not that gold owners are going to lose out, it's just that it may go slower. Now, the key question, as I'm repeating again and again, is that what if this is a change of uh, global order that is happening? What if US is no longer reserve currency in a few years? What if this is precursor to some kind of a war or some situation like that, and that's getting priced in? In all those situations, this ratio will not work. And if the ratio may or may not work, what is the best way forward? You have equity allocation and you have gold allocation. If the ratio works, your equity will do really well. If your ratio does not work, gold is anyways doing very well. So this is how you will be able to allocate some part to gold. Most people don't allocate more than 2, 3, 4, 5% gold. That is meaningless. Please allocate some reasonable part of your capital to gold. My own thumb rule has been age divided by 2. Whatever that number is should be the percentage of your net worth in gold. Please do that calculation for yourself and let me know in the comments how well allocated you are to the gold. Do watch these other videos, do like and share these videos, do subscribe to our channel, and I'll see you in the next one. Bye.